On Focus today, we are reviewing the performance of the nation's stock markets in the first half of this year. My guest is Muktar Mohammed, the market analyst. Bros Muktar, welcome.
Welcome. Thank you, Mr. Eko.
We have gone past 2 quarters this year, and one asks, how do you review the highlights of what has happened in the markets
I have here that divided into two. We have the first half of the year was very bullish, and the second half of the year has been very bearish. But one thing we should know is that market movement is always a reflection of economic movement, and the economic movement is a reflection of economic statistics. When you look at the market movement and the economic movement, reflection of the economic movement, you realize that the market has not performed badly based on what is happening in the economy. And when you look at the statistic that's coming from the economy, and then with the statistic and the economic movement, you realize that the market also has not performed badly, because it's a reflection of what is happening in the economy. And you and I know that the economy has been one of uncertainty, especially late passage of budget, poor implementation in government policy, no fiscal policy in place. The only fiscal policy we have the Economic Recovery Group Plan, which as it stands now is in infant stage. And this is the fourth budget we are having it, and we're having controversy over the full implementation of it.
Banking securities often dominate activities here on the exchange. And looking closely at the results of many of the banks for 2017, it appears that some of them didn't meet expectations of some investors. What would you say are the missing lines from the banking subsector?
I think you say they don't meet expectation, depending on this bank you're looking at. When you look at this first tier bank, you could say they actually meet expectation of investors and even surpass it. When you look at GTB, look at Zenith Bank, you look at UBA, you look at Access Bank, they did very well in their result, and even they paid the dividend to their investors.
But it's like the quality of what they paid wasn't that pleasant, at some AGMs that we...
Well, maybe some AGMs may have not been pleasant, but from the economic climate they were coming, but they're coming from a recessed economy, and again they were able to pay dividend to the investors. Like Zenith Bank, GTB increased their dividend payout by 10 kobo, and then UBA increased its dividend payout also by 10 kobo, and also Access Bank increased its dividend payout by 5 kobo. So when you look at this...
But this kobo thing is the thing that actually disturbs investors. No, you wait for so long and you take 10 kobo.
No, you see, you paid Zenith Bank, for instance, paid 2 naira. Remember they paid an interim before, and then next thing gave on. Now GTB also paid interim before. Look at around the 2 naira way. But when you look at the tier 2 banks, they didn't pay. They paid below expectation, especially a bank like Fidelity Bank that actually paid good dividend, or normally paid 18 kobo the last year, and this year was just paying 10 kobo. Then, but when you look at the other positives, you look at the non-performing loans of the bank, where they're coming from, especially a bank like First Holdings, you realize that it's a company that's beginning to come out of the wood, because it was able to pay dividends through its holding structure. But the bank balance sheet, which happened to be the cash cow of the bank, is beginning to get better by the day. So you could see that was responsible for the movement of that stock from where it was today to where it is today.
The manufacturing subsector, especially the cement companies, they could have been the toast of investors during this period of our review, but for what we see as cash flow issues and operational problems. So how do manufacturing companies quoted on the exchange get out of this issue, especially cash flow problems?
They can't get out of it, unfortunately. They have to do with what the economics offer to them. And some of them are becoming innovative. They are going to get bond. Some of them also are beginning to get credit from other places. But you see, those are only reflection. People like Dangote and Co are able to do that because they have offshore companies. They have subsidiaries outside Nigeria. But those that don't have such subsidiaries, they have to do with the problem we have here, the high rate. But we are optimistic that before the end of this year, the rate will go down, and then we'll begin to see that playing the bottom line of this.
We see that politics is already heating up in the economy. So as we move into the second half of the year, what picture of the markets would you paint?
Look, at the beginning of this year, there's going to be two ways. It's going to be two half of the market. We're going to have the first half, which was going to bully the second half, which is going to be based on the politicking. But again, the good thing that in the midst of the politicking, towards the end of the year, especially towards the beginning of the year, they will begin to see companies pay dividends, and that's year-end comes to play. So it will try to outshine to militate against so much loss in terms of the market. So we'll see that play out. But by and large, we're going to see that the market is actually going to suffer from political activities, especially in terms of economic indices. But not to forget that election year in Nigeria is also a year whereby a lot of liquidity flows into the system, and some of this liquidity will still find their way into the stock market. And not to forget that by the first day of trading, or by 1st of July, the new regulatory policy will come out for the pension fund administrators. They will be asked to invest above 25% in the equity market. That could be a trigger that could turn around a lot of things in the market.
Is the larger economy moving towards growth prospects, or do we need to rejig some sectors?
We need to rejig some sectors, definitely, but we need to see that we need to agree that the larger economy is moving towards growth sector, because if it's the first and the first quarter results, the growth has improved comparable to where we were last year, and the second one we're expected to improve again comparable to where we were last year. But again, you need to look at that one in the context of the price of crude oil. The price of crude oil goes up, our economy goes up, because that's the barometer for measuring our economy. If the price of crude have any crisis and go down, then we'll begin to see that begin to reflect in our earnings capability. So for now, I think we are fine.
Thank you very much, Muktar Mohammed, for coming on this show.
It's always a pleasure to be here.
Muktar Mohammed has been my guest on Focus today. He's been reviewing the performance of the activities at the nation's stock market in the last 6 months.